Today's topic is SWOT analysis, which is chapter 3. So going into SWOT analysis, first as a business, we're still talking about the strategy, the corporate strategy. So when in the course of you developing a strategy, you need to gather information. So how do you gather this information? You need to develop a strategy. So for you to develop this strategy, you need to check within you as a business, in-house, you need to check, and you need to, which we call internal audit. And you need to check whatever happens. You need to make analysis about the environment which you operate. So that means within your business, you have to make an analysis, which is internal audit. Outside the business, which means the environment in which you are operating, you need to also analyze it. This is the only way you can come up with a strategy. So gathering information involves internal audit and external audit. Is that clear?
Yeah.
All right. So let's see what they wrote here. It said, gathering information to help develop a strategy. When making plans or developing a business strategy, it is important to gather appropriate information. A business can use a variety of methods to do this. So you need to make a decision as a business. And in the course of you making a decision, the first thing you need to do is to gather information, because it is only on this information you can strategize upon. Do you understand?
Yes.
All right. So to develop a strategy, we need internal audit and external audit. What do we mean by internal audit? Internal audit is an analysis within the business itself and how it operates. That means whatever you do as a business, what are those things you have understood in your business? And because that means we're talking about your strength and your weakness. Do you understand what I'm talking about here? So for your internal audit, you need to understand your strength as a business, which you operate in. What are your strengths? And what are your weaknesses? And what are the causes of your weakness? Why are you not performing? So you have to understand this within your business. That is when you are doing an internal audit to strategize or to develop your strategy. So an internal audit is an analysis of the business itself and how it operates. It attempts to identify the strengths and the weakness of its operation. So you need to identify what your strengths are and what the weaknesses are. So what are these strengths and weaknesses, and what does it cover? One, product and their cost, quality, and development. The kind of product you produce. How much do you spend in ensuring that they are made available? How do you plan to develop these products? What are those ways in which you package your products? That's part of internal audit. Two, finance, including profit, assets, and cash flow. How do you source for fund input in your operation? How do you source for fund? What are the profits you have made compared to maybe your previous profits and profits now? I mean, the current profits and the profits before now, the previous profits. And what are your cash flows? We're talking about the cash inflow and outflow. Note, cash flow is not the same as profit. Profit is a return on your investment. Profit will come as a result of you taking away your cost from your revenue. And your revenue is part of your cash inflow. Do you get it?
Yes.
All right, great. The third one, production, including capacity, quality, efficiency, and stock management. What you produce, how do you manage your stocks? We're talking about your stock management. That means we call it stock is the same as what do we call it? Your inventory control.
Okay.
Are you with me?
Yeah.
So you need to understand your inventory control, and inventory control is part of an internal audit. Is it clear? Are you with me, please?
Yes.
Hello?
Yes, sir.
All right. So, and the last one is human resources, which includes the skills, the training, and the recruitment. So For you to make an internal audit regarding the strategy or regarding developing a strategy, you need to understand the product you produce, the cost of it, the quality of it, and how you develop your product. You need to find out, you need to gather information about your sources of finance, the profit you make, your cash inflow, and your assets. You need to gather information about your production capacity, your inventory control. And you need to understand each department that you have and what their functions are in the course of operating. And lastly, your human resources. You need to understand your workforce, the skills they have. How do you want to ensure they improve through training, and the kind of people you recruit. So these are the information you need to gather internally, which will be helpful when you are developing a strategy. Do you have any question about internal audit?
No.
Great. So we use internal audit whenever we need to make decisions or whenever we need to gather information to develop a strategy. Now let's go into the external audit. External means what is beyond our control. External means the environment we have. External can also mean our competitors. Are you with me?
Yes, sir.
All right, so let's go into our external audit. An external audit is an analysis of the environment in which the business operates. The business has little or no control over it. Like I told you, it's beyond our control. There's nothing we could do about it. Whatever decisions or whatever information we gather through this environment, we can't influence them. That's why we call it external audit. The only thing we can do is work around it. Are you with me?
Yeah.
For external audits, we cannot influence, rather we can only work around it. So let's say the business has little or no control over it, like I told you. This audit may deal with 3 key areas: the market, competition, the political, economic, social, technological, legal, and environmental issues relevant to the business. Like I told you earlier, when we're talking about external audit, we're talking about your competitors, your rivals, those that you do the same business with. They are part of the external audit. 2, the industry you are in, the market. It's part of external audit. Then we talk about governance, which involves politics, which involves economics, which involves technology, and the legal environment. All these ones are not within your own control.
Okay.
Is it clear?
Yeah.
So the audit should analyze the market or markets in which the business operates. For example, it should analyze the size and the growth potential of the markets. So when you do whatever information you are gathering regarding the external audits, you should be able to analyze the size of your business in that market and the potential growth that your business can have in that market. The potentials you have in terms of growth in the market.
Okay.
That means we're talking about how far you can go in taking more of the market share. That's what the size and growth potential of the market is. I think you understand what market share is, right?
Yes.
All right. So the characteristics of customers in the market. We're talking about the habits, the taste of customers in that market, because they are important too. So you need to gather information. You need to make research about your customers, their habits, their characters within the market. 3, the products on offer. The kind of product that the market is looking for, and what your own kind of product compared to that in the market. 4, the pricing structure. And when you're talking about the pricing structure, we're talking about pricing strategies. What are the pricing strategies used in that market? Is it price skimming? Is it penetrating pricing? Is it price discrimination? Is it cost plus pricing? You need to be able to understand the kind of pricing strategy they use in that market. Is it clear?
Yes.
5, how products are distributed. We're talking about the production, the distribution channel. Is it producers to the consumers? Is it producers to the wholesaler to the consumer? Is it producer to the wholesaler to the retailer to the consumer? Is it produced from producer to agent to the wholesaler to the retailer to the consumer? You need to understand the production, the distribution channel. And when we talk about distribution channel, we're talking about place, right?
Yeah.
How the product will get to the final user. It has to be analyzed. You need to gather information about that.
Yeah.
The 6th one, how products are promoted. What are the promotional methods or promotional strategy they use? Is it advertising? Is it sales promotion? You need to understand. And lastly, industry practices, such as whether there is a trade association or government regulation. You need to understand the legal aspect of it. Do you have regulations that you have to go with, or there's a trade association? We can say, you know, these trade associations are a group of businesses coming together to form an association. We can have teachers association. We can have schools association, school owners association. So these groups, they are there to protect the interests of the society, of the industry. So that you have to also gather information about. Is it clear?
Yes, sir.
Okay. Also said, the audit should also analyze the competition in the market. The nature and strength of competitors will be an important influence on the development of a strategy. So, in the internal audit, for your internal audit, what do you need? You need to understand your strength and your weakness.
Okay.
As in a business. But for the external audit, you need to understand the opportunity in the market and the threats in the market.
Yes.
So
Okay.
how do you go about understanding the opportunity and the threats in the market? It is only through information that you're able to gather. Is it clear?
Yes, sir.
Great. So they say, for example, it should analyze, 1, the structure of the industry. That means we talk about the size of your competitors, the numbers of your competitors, and the size. So when you talk about the structure in the industry or the structure in that market, it means the size of your competitors and the numbers of your competitors. You need to understand that because that makes up the structure. Do you understand what the structure is now? The structure is just like when you talk about a political party having a structure. The structure of a political party is the people. The structure is not something that is built. The people are the structure. So in the market, the structure in the market or the structure in the industry are the numbers, are the businesses in that industry, are the firms in that industry. They make up the structure.
Okay.
So that's why whenever you're talking about the structure of the industry, the 2 things you need to talk about are the numbers of the firms in that industry and the size of the competitors. Do you understand what structure is in an industry?
Yeah.
Great. 2, the production capacity and marketing methods of competitors. So, what is your market? How do you produce? What is the number? How is your output within that market? And how do you promote your product? How are your competitors? What are the output of your competitors? This has to be analyzed. So we are talking about understanding your competitors. What are those things you need to understand about your competitors? What are those things you have to analyze about your competitors? 1, the structure of the industry, which will let you to understand the size of your competitors and the numbers of your competitors. 2, the production capacity of your competitors and their marketing strategy. 3, how likely it is that there will be new entrants to the market. Is it a perfect competition or not? You need to understand that.
Yeah, okay.
We entry into the market, then there's likelihood that you have more competitors. But if going into the market is a bit restricted, there might not be much competitors. You need to understand that. You need to analyze that. How easier it is for new businesses to come into that industry? That is what we're talking about. New entrants. Is it clear?
Yes.
The fourth one, how likely it is that businesses will leave the industry? So there's entry, there's exit. Do you think you should be able to, in as much as you're able to analyze how easier it is for businesses to come into the industry, you must also be able to analyze how easier it is or difficult it is for businesses to leave the industry. These are part of things you need to understand about your competitors. The profits of your competitors. You have to compare your own profit and that of your competitors. Because this will be stated in their financial statement for the year, so you are able to see it. That's one of the problems or one of the disadvantages of public limited companies, because they have to publicize their financial statement. So you'll be able to know their profits compared with yours.
Mm-hmm.
Are you with me?
What?
Are you with me, please?
Yes.
And the last one here, do you know where I am already?
Yes.
Okay, the mouse is there. The competitors investment programs: cost, revenue, cash, and assets. The last thing you need to understand about your competitors is their assets, their investments, the revenues they make, their cash. You have to understand these things. They are information that you should be able to gather. So when you're able to put all these together, then you should be able to develop a strategy to use for your business. Do you understand?
Yeah.
So in a nutshell, gathering information to help develop a strategy, you need both internal audit and external audit. When you talk about internal audit, we're talking about the strength and the weakness within your business. And when you talk about external audit, we're talking about the opportunity in the market and the threats in the market. Any question about that? Any question about it?
No.